In this video, I want to talk about pound. Now, I did not take this trade. I took the euro instead. It's a trade to the downside. Okay, so I want to talk about a short setup in pound. The reason I'm talking about this one is because I want to provide you with an example where a gap in the market on the way up becomes resistance. Okay. So we can see on this day the market's basically going up. Okay, that's basically a pump up. Now it's heading into the high of the week. So this is the high of the week at that point in time. Now, why I like pound for the short setup is because once the market reaches this high, let me grab an arrow. Once the market reaches this high, it then starts to come back down. Okay, so we can immediately see that there's a change in market direction. So we have a move up, and now the market stopped moving up, and then we have a move down. And so the idea is, where can we get in for this short setup? Okay, and you can notice I've already drawn a box around where there is a gap. Okay, so on the way up, these levels become resistance. Okay, so once that gap has been established on the way up, I move back down to start the new trend to the downside. Any pushback up into that gap is going to offer resistance, and that's why I like this trade better. Okay, so the setup was basically a break above the weekly high, which became false because we're back inside the range of that week. Okay, and then a pushback up into any key resistance level, such as where the breakout occurred, or more importantly, if there is a gap, because that's going to be a lot more easier to identify. Okay, now this particular trade was executed at the start of the New York session, right on that first 15 minutes of that hour. 8 a.m. New York is the start of the New York session. As I said, I didn't trade the pound. I traded the euro for a short setup. Okay, euro and pound, they're going to move in the same direction, so you pick one or the other. I liked the euro better because it had a much more violent pump up. Okay, so if I switch over to my euro chart, there's the pump up on the euro. Okay, so I like this better, and I already had marked out some key resistance levels where the market came into. This was a lot more, for me, visually more clean. And then we have the breakdown. If I switch over to a 5-minute chart, it might be a bit easier to see. So we had the breakdown. Once we moved up into the key resistance level, the market started to move down. Okay, I identified a new low, and there is my favorite 3 up candles that I then like to short into if I have a prognosis that the market is headed down, which in yesterday's trading, my directional bias was to the downside, and my target for the euro for that particular trade was simply down to the low of the previous day. Okay, so that was a nice trade. So as I said, I didn't trade the pound, but I wanted to give you an example where on the way up, okay, gaps are resistance, right? Now, that was the initial pump on the way up from this move. Whoops, that's not what I want. On the way up from this London move, your resistance is going to be any gap at a key level, and that key level in this case was high of the week. Okay, so once we see the change in direction from this initial pump, we have a consolidation which forms a gap. We see the move coming down, we're then looking for that pushback up into the gap or any other key level for a short entry at the right time in the right session. Okay, so pound or euro, they typically trade in the London session or the New York session, and that's where you want to trade them. You do get opportunities in the Aussie as well sometimes. Okay, predominantly they trade in London or New York. And so the other thing I also want to show you is that when you have a market that has opened and closed far away from its open, okay, so here's where the market's opened, okay, and on this day it closed all the way up high, okay, so we've had a nice rise, which is basically a pump. An expectation to balance the market is that the market needs to come back down to this opening price, okay, which is what has occurred. And so that's another reason for shorting this market with all those other things combined, right? So it's not just taking one thing. You've got a pump, you've got a change, well, you've got a consolidation forming a gap, you've got a change in direction. Your entry is going to be at the pullback into the gap, right? Pushing back up into anyone that's already short from that level. And your other reason is that you've got a market that has closed up high from its open the previous day, and having the knowledge that that market needs to come back down to rebalance this area, okay? Now, in my own private community, I talk about these things in advance, okay? So if I show you the thought process and the post where I outline all of this prior to this occurring. Okay, so here's the post in my private community where I spoke about this and clearly marked out that we have a market that has closed a lot higher than it's open, and I call that a market that's out of balance, and note that at some point we need to come back to this level, okay? And so when I say at some point you need to come back to a level, then the job becomes identifying a reversal, as we have seen this move up, the consolidation, the gap, the move that starts to then come down, push back in to that area for a move down. So you need to have some kind of a bias, and then your job becomes to identify the turning point to then be able to trade the move back down to where you expect it to go, okay? So your job is to review the charts every single day and try and identify the things that I'm teaching on this channel. You're learning about price action behavior, and your job is to do that on your own computer, on your own chart, so that when you look at this in real time, you're able to identify those setups, those patterns that reoccur on all pairs every single week. You're then able to identify those things in real time. If you don't do it on your own charts, looking at it on your own computer, then you're not teaching your brain what to look for. So you need to rewind my video, watch my other videos that talk about gaps, my other trade examples, and then try and go on your own charts to find the same recurring patterns, okay? If you're just watching these videos as entertainment, well, there's no benefit. You really got to learn, and you learn by studying the charts, going back and rewinding, looking at what I'm pointing out, trying to find the same elements that I'm pointing out on your own charts. Try and repeat what I'm pointing out in real time on your own charts. Okay, that's how you learn. So study the charts, do some back testing, prove that it works for yourself. Okay, prove that you can identify what I'm showing you here in real time. Okay, hope the video was useful. I will now talk with you in a future video.